Aloha, I'm Carl Bonham, Executive Director at UHERO. I'm here with another UHERO focused video. This time I'll be talking about our second quarter forecast report. So we expect Hawaii's economy to continue on a slow growth path, constrained by lack of population growth and very, very weak labor force growth. While at the same time we'll see some economic benefits from the rebuilding on Maui, broadly speaking from construction across the entire state, and the slow recovery of international visitors, even while we deal with a pullback in the U.S. visitor market, in the domestic visitor market. So we know through the month of March, total visitor arrivals are down 5%. We know visitor spending is suffering. We think visitor spending for the whole year is going to be down about $1 billion and then a gradual recovery thereafter. We don't have data yet for April, but we don't have visitor data yet for April. We do have passenger count data. And the interesting thing about the passenger count data, the light blue line here is the state domestic passenger counts. It's weekly data that we seasonally adjust. You can find it on our data portal. The gold line is Maui. And so the thing that's so different about these, of course, is that the statewide domestic passenger counts are really quite stable, basically flat since the end of last year. While with Maui, we saw this almost an 80% drop off in passengers right after the wildfire and then a pretty rapid bounce back. But then since the end of last year, they've really been trending down on a slow, steady decline. That tells you that other counties are seeing more passengers and seeing more visitors. So some of that loss on Maui is being picked up elsewhere. It also points to the importance of the international market. As we have this weakness in the U.S. market with passengers and arrivals that are below where they were in 2023, we need to see that continued recovery of particularly Japan, but other international markets. Unfortunately, our major international markets are experiencing weak economies. I mean, really, everyone in the world, all economies in the world are weak when you compare them to the U.S. economy, which grew at 4+% in the second half of last year, and we're just now beginning to see the signs of that sort of soft landing, if you will, economy that we've been talking about. So it's important that we see that rebound in international visitors, but all of those economies are facing weakness, and they're also facing a very strong dollar. So this chart shows the currencies for Japan in green, Australia and Canada, and then the light blue line here is the weighted average where we've taken the visitor share, so the share of international visitors that are from these different markets, and we've done a weighted average of the exchange rate. And so overall, our primary international markets are dealing with about a 15% drop in their purchasing power. So that means even while as they slowly return in numbers, their spending is going to be constrained. And so that acts as a sort of a drag or not as much growth as we might have expected otherwise. Broadly speaking, the labor market has finished its bounce back from the pandemic, and we talked about this in our last forecast report. And the behavior of payroll jobs across the different counties differs pretty dramatically. So this is an index chart. Everything's lined up at 100 in January of 2020. And you can see that on the Big Island, the light blue line, their payroll jobs are almost back to 100. So that's the index level. So that means that they've almost completely recovered to pre-pandemic levels. In contrast, Oahu and Kauai are 3 to 5% below pre-pandemic levels. That makes sense because the overall labor force in the state is about 15,000 persons smaller than it was before the pandemic. Maui, of course, is its own unique situation. It's driven by the wildfire. Maui's lost about 5,000 payroll jobs since the wildfire. So compare July of last year to the most recent data in March. So that's about 6% of the payroll jobs. They've also seen about a 5,000 person drop in the labor force and declining unemployment in part because of that drop in the labor force. And it's where those jobs have been lost that's important. They're primarily food service, Also, we see this in transportation, not so much air transportation. It's more concentrated in things like tour bus operators and things like that, and then real estate and rental leasing. And so you don't see huge drops in accommodations, but you do see it in food service. And that means that so long as we have number of visitors on the island 20-25% below where it was pre-fire, you've got 15,000 fewer people who would normally be eating out, going to restaurants, going to bars, shopping in retail establishments, and that money's just not there. And so those jobs are hard to come by. Longer term, we know that population is a major driver of overall economic growth, particularly labor force growth. Right? So if you don't have labor force growth, the only thing that's going to cause your economy to go is productivity growth, right? Then if you don't have a growth in the number of workers, it's got to come from more productive workers. In a service economy, productivity growth is not always as strong as it, say, is at the national level. And for Hawaii, we showed a graph like this last time. It's updated now with full year 2023 data. It's indexed to 2019. This is population by county, and the differences are pretty amazing. Big Island has seen the most population growth. Oahu has been losing population for several years now, and our forecast is for that to continue to be very, very stagnant. Our forecast for Maui is a 3,000 or 4,000 person loss of population between 2023 and 2024, and a very slow recovery. And it shouldn't be a surprise that the county with the most population growth is also the county that's added the most housing units and has sort of the most affordable housing situation of any of the other counties. And so this very anemic population growth and slow labor force growth is going to act as a constraint on overall economic growth. And longer term, we expect after this rebuilding growth that we see, or after this boost in the economy from rebuilding on Maui and some of the federal construction spending, we expect to see job growth trending down, sub 1%, and real GDP growth trending down as well. I hope this was helpful. Oh, I should point out that all of this forecast was done before the ledge finished, and so we didn't have the hard numbers on these tax cuts that are coming. Those are important, they're big. We'll be coming out with some analysis of those soon, and they'll be incorporated into our next forecast report. And that also goes for any changes we see in things like short-term vacation rental rules across the state. So mahalo.